Hey there, it's Casey Dim at TaxSaleAcademy.com, and welcome to our weekly tax sale question segment. Now, before we get started, don't forget to tap that subscribe button. That way you don't miss out on future tax sale training videos. And if you are a subscriber, feel free to drop your question below any of our videos, and we'll be happy to answer. And we might even do a video response just like this one. This week's question comes from, it looks like Thomas. It says, should I use Zillow or Realtor.com for valuing properties? Thomas, great question, and thank you so much for being a subscriber. All right, so let's talk Zillow and Realtor.com valuations. A lot of people like to use these computer-generated numbers as if that is the facts, as if it's a real market valuation. Unfortunately, there are people out there that also teach you should use these numbers as an easy way to do things. And you should teach that these are what you should buy your investment properties off of. Well, there are a lot of variables that people must take into account. A lot of people don't realize that these computer-generated numbers pull in a whole bunch of data and they spit out this number, and they can easily be manipulated. So for example, if Zillow values a property at say $200,000, and then I list that same property at $250,000, in many situations, their algorithm will adjust the valuation on that property and say it's suddenly going to be worth more money. But why? Simply placing a property on the market at whatever price I desire can change the value when it comes to Zillow's system. Now, obviously, I know how it works. You probably know how it works. Again, there's lots of data that they pull from. When a property is listed, they say, okay, the property's worth more than we thought. But, truthfully, it seems kind of silly to me. When we dive deeper, we also must factor in the fact that condition is not accounted for. A home at a tax sale is likely to be in much, much worse condition than the comparable properties that Zillow or Realtor.com estimates of value are being generated from. A computer-generated number of any sort should never be the sole number that you make your investment off of. I've had people email me before that tell me, hey, I bought this property and Zillow said the property's worth $100,000, so I snagged it at $50,000 thinking it would be an incredible deal. I went out there to take a look and I realized that the house had been burned down. There was no house there. Zillow didn't tell you that, right? Obviously, in some situations, the numbers might be accurate, but learning how to value real estate is a major skill that you need to take the time to learn. When you're a real estate investor, valuing real estate is one of the most important skills that there is. Nearly 99% of the properties that you and I buy, we can determine a value based on what's called the comparable sales approach. Now, I'm not going to go into detail in this specific video. We teach all about it inside the Tax Sale Academy, obviously, but the idea is that if you have two identical properties side by side, a buyer is going to choose the cheapest option. So you'll take sold properties that are comparable to the property you are attempting to value. You'll make your adjustments if needed for things like size and condition, and you'll come up with your valuation. This is the same thing appraisers do, although they do it on a much more detailed manner. We typically do it on a pretty rough scale because we're just kind of shooting for a ballpark figure, and then we can back down that number to determine our maximum bid amounts while factoring in a very, very conservative buffer for any issues or mistakes. So in short, never rely on computer-generated values for tax-defaulted real estate. Never rely on Zillow or Realtor.com values. There are far too many things that can differ between the number that that computer spit out at you and what the reality is in the real world when you go and look at that property. So Thomas, hopefully this helps you out. Thank you everybody for watching this video, and don't forget to subscribe to this channel so you don't miss out on future tax sale training videos. Take care, and we'll see you next time. Bye-bye.